Imagine this. You've been saving for years, working hard for every dollar. But when it comes to investing, you freeze. The fear of losing money, the overwhelm of too many choices, the worry that one wrong move could make it all disappear. Sounds familiar? Here's the truth. You don't need thousands of dollars or Wall Street experience to build wealth. In fact, I'm about to show you how ordinary people turned small investments, sometimes as little as $100, into life-changing fortunes. And if they can do it, so can you. Take Thelma Howard, for example. She wasn't a financial genius. She was Walt Disney's housekeeper. Every Christmas, Walt gave her just a single share of Disney stock. By the time she passed in 1994, that small gift had grown into a $9.5 million fortune. Or consider the story of Ronald Read. He was a gas station attendant and janitor in Vermont. Nobody knew he was quietly investing small amounts of money into blue-chip stocks. When he passed away in 2014, he left behind an $8 million portfolio. He didn't win the lottery. He didn't have a high-paying job. He just consistently invested small amounts and let compounding do the heavy lifting. And then there are the thousands of first-time investors I surveyed. 2 out of 3 made money on their very first $100 investment. Not because they were lucky, but because they followed timeless principles I'm going to share with you today. Stick with me, because in the next few minutes you'll learn a step-by-step blueprint to start investing with confidence, grow your money even on a tight budget, and avoid the mistakes that cost beginners the most. Now, here's the thing. Whether you've been investing for years or just starting out, the fears are the same. Losing money, not knowing who to trust, missing out on the next big opportunity, or simply not understanding where to begin. I know those fears personally. Back in 1999, I was a computer programmer earning just $1,300 a month. Every dollar felt sacred. And then the market crashed 70% over the next 2 years. I learned the hard way what it feels like to lose. But I also learned something even more valuable. Those fears don't go away unless you face them, and the right strategy makes them manageable. So, how does investing really work? It's not about meme stocks or chasing hype on social media. It's about making your money work for you, so you don't have to work forever. Every share of stock is ownership in a company. When profits grow, the value of your share grows. Add in dividends, the company paying you part of its profits, and suddenly your money is multiplying while you sleep. That's how fortunes are built. So, how much do you need to begin? Here's the secret. There's no magic number. It's not about investing 10% of your salary or hitting some perfect target. It's about starting. If all you can do is $25 a month, do it. If it's $100, even better. Because even that small amount, invested consistently, compounds into life-changing money. Here's an example. If you invest $100 a month for 30 years, and the market grows at the historical average of 10% a year, you'll have more than $200,000. If you invest $200 a month, that's over $400,000. But if you push yourself to $300 a month, you'll be sitting on more than $600,000. That's the power of compounding. Now, where do you actually invest? With so many apps and brokers, it feels overwhelming. But here's what matters most. First, no commissions. Don't waste money on trading fees. Second, fractional shares. So you can invest in companies like Amazon or Tesla without needing hundreds of dollars for a single share. And third, tools and research to help you make smarter decisions. When I asked over 24,000 investors about their very first investment, the answers were eye-opening. Some went bold with Nvidia or crypto. Others played it safe with ETFs and dividend funds. And while not every bet was a winner, 2 out of 3 actually made money. The big lesson: It's not about picking the perfect stock. It's about building momentum and sticking with it. Focus on what you know. If you use a product daily, whether it's a streaming service, a smartphone brand, or an online store, chances are millions of others do too. Those familiar companies can be a great starting point. Then, expand into ETFs to spread your risk across hundreds of companies at once. One of the smartest strategies I've seen, and the one I use myself, is called the core satellite strategy. Here's how it works. 50 to 65% of your money goes into broad ETFs, giving you instant diversification and steady market returns. The other 35 to 45% goes into individual stocks you believe in. This way, you get the safety of the market plus the growth potential of specific companies. And since each individual stock only makes up a small piece of your portfolio, even a bad pick won't wreck your future. And let's not forget the real superpower of investing: compounding. Let's say you invested $5,000 in Amazon at its 1999 peak. You'd have $250,000 today. But what if you didn't have $5,000? What if you only had $16 a month? Believe it or not, spreading that same $5,000 into tiny monthly investments would have actually made you more money, over $300,000, because you bought shares during downturns at cheaper prices. That's the magic of dollar cost averaging. Here's another simple example. If you put just $10 a week into the market, the price of 2 cups of coffee, at an average return of 10%, in 40 years you'd have over $200,000. $10 a week. That's less than most people spend on streaming subscriptions. So, when should you sell? The truth is, the biggest gains come from holding. Amazon between 2002 and 2012 grew 20 times. Sounds great, right? But if you'd held just a little longer, you would have made 347 times your money. The lesson? Don't rush. Think in years, not weeks. The investors I surveyed gave one piece of advice above all: invest more, sell less, and let your money grow. At the end of the day, it's not about that first $100. It's about the habits you build, the patience you develop, and the momentum you create. Every small step adds up to something bigger, maybe even your first million. So start small, start today, and let your money work for you.